everyone, welcome back to Mindful Investing. In today's video, I'll be sharing my personal watch list of stocks that I'll be keeping a close eye on, especially to buy during any market pullbacks. I won't be buying every single stock I mention here simply because, like most retail investors, I don't have unlimited capital. But this list might give you some valuable ideas. Maybe some of these names are already in your portfolio, or perhaps you're wondering which stocks could be worth buying when the market dips. And for the stocks already in my portfolio, I'll consider adding more on key support levels. For others, I'll look to initiate new positions depending on my portfolio balance and position sizing. All these companies have solid fundamentals, healthy balance sheets, and strong potential to outperform once the market rebounds. I'll also share my model projections, which gives me additional confidence when I decide to buy or average down during downturns. So let's dive right into it. The first stock in this list is Arista Networks. It designs and sells cloud networking solutions primarily used in data centers and high performance computing environments. They are benefiting directly from the AI infrastructure boom and the rising demand for cloud scale networking. I have Arista Network as a buy around $120 with a 135% upside potential in 5 years. The company has $2.22 billion in cash with zero debt and generates about $3.97 billion in free cash flow. That's an exceptional financial profile. I actually did a swing trade in Arista Network earlier this year, but I'm planning to add it back to my long term portfolio because I believe in its continued dominance in the networking space. The second stock in this list is AppLovin. It is a leading software company that powers mobile app monetization and marketing automation. They help developers grow their apps using AI-driven ad tech solutions, which is a high margin and scalable business. I consider AppLovin a buy around $484 with an estimated 149% upside potential over the next 5 years. Financially, they're in a solid position. They have $1.22 billion in cash with $3.5 billion in total debt and a free cash flow of $2.85 billion. That's a decent setup for a company in a fast growing digital ecosystem. Next up is On Holdings. The Swiss performance footwear and apparel company has built a strong brand in the premium sportswear market. They are gaining serious traction in North America and expanding globally with smart marketing and innovative product design. On Holdings is a buy at around $35, and I see an upside potential of about 150% over the next 5 years. They have got $933 million in cash with $497 million in debt and a free cash flow of $347 million. The fundamentals are improving year over year, and their strong brand momentum makes them a solid growth play. Next up is Mercado Libre, which is often referred to as the Amazon of Latin America. But it's more than that. It's a blend of e-commerce, fintech, and logistics. Their Mercado Pago and Mercado Envios divisions have made them a powerful player in the regions of digital economy. I see Mercado Libre as a buy around $1,750 with a huge 342% upside potential in 5 years. Financially, they are well positioned with $7 billion in cash, $8.9 billion in total debt, and a $7.3 billion in free cash flow. This is a company that continues to dominate its space with a strong ecosystem moat. And the last stock in this list is Intuit. It's a leader in financial software and services, the company behind TurboTax, QuickBooks, Credit Karma, and MailChimp. It's a strong long-term compounder in the fintech and business automation space with increasing focus on integrating AI to serve small businesses and individuals more efficiently. Intuit is a buy around $560 with a projected upside of 102% over 5 years. It holds $9.48 billion in cash with $6.6 billion in total debt and a free cash flow of $6 billion. Their diversified product suite and recurring revenue makes it a resilient pick even in volatile markets. Other than these, most of the stocks in my portfolio remain a strong buy, except for Lululemon, PayPal, Target, and Revolve Group, which I'm currently neutral on. For anyone new here, here's a quick look at my current portfolio. I have Broadcom, Vertiv Holdings, Lam Research, AMD, Nvidia, Amazon, Google, The Trade Desk, Chipotle, Duolingo, Intuitive Surgical, and Astera Labs. Now let me also show you the ETFs I plan to add more during these pullbacks. These are actually my core stability holdings. First up is SEHG. I plan to invest around $10,000 if it drops to $28. That's my signal level, roughly around the 200-day EMA on the daily chart. Since I do not make any recurring investments on SEHG, my strategy is to always buy SEHG when it touches the 200-day EMA. I'm already up 26% on my position and will keep building it for the long term. Next up is SEHT. I'm already doing recurring investments on this, and on top of that, I'll buy more, maybe around 100 shares if it falls below $25. And then we have IBIT. I'm investing in this weekly as well, and I plan to keep buying consistently over time. Actually, SEHD and IBIT are the two ETFs in my 15-year challenge, which I plan to keep buying for my kids' education. And lastly is JEPQ. I'll add more shares if it goes below $54. I strongly believe in maintaining a diversified all-weather portfolio, one that can withstand different market cycles. And my personal strategy is to identify one or two high conviction stocks and load up on them during downturns, because that's where some of the best long-term profits come from. Before I wrap up, I want to touch on something that often gets overlooked in investing: the mindset behind every decision we make. I've been spending a lot of time studying the behavioral side of investing, and it's incredible how much impact psychology has on long term returns. Before focusing on numbers, valuations, or charts, it's essential to first build the right investing mindset. Ultimately, it's emotional discipline and rational decision making that separates successful investors from everyone else. If you'd like me to create a dedicated video on behavioral investing, do let me know in the comments. It's a powerful framework that can completely transform how you approach the market. That's it for today's video. If you found this helpful, don't forget to like, share, and subscribe to the channel. It really helps grow the channel and reach more investors like you. Thanks for watching, and as always, stay patient, stay consistent, and invest wisely. I'll see you in the next one.